Well, good morning. Thanks for joining us today. I'm Marlon Bowling with you. Well, here we are. It's report day. I'm all choked up just because it's report day, I guess. We're going to be taking a look at the market action here with a little help this time around from Brian Hoops. He's with Midwest Market Solutions, and he's based in Springfield, Missouri. Brian, the report comes out at noon Eastern time today and 11 o'clock Central time today. And by and large, from what I'm hearing from people, it sounds like there may be some adjustments on South American production, but other than that, I don't know if it'll have a whole lot of market impact. Historically, isn't this kind of a quiet report?
Yeah, good morning, Marlon. It is a quiet report based off of history. So we probably won't have a lot of fireworks today. I really don't expect to see much in the way of big moves coming from this report. Now, South American production is going to be closely watched, but USDA likely be a little bit conservative. They're around 139 million ton soybean crop out of Brazil. And they're going to bring that down, I think. But I also think the trade is somewhere way south of 130 million tons. That's where we're actually trading, even though the average trade guess is around 133. So USDA could come in near the average trade guess. But tomorrow, CONAB comes out. Usually they're out the same morning as USDA numbers, but they're coming out a day later, and that's Brazil's reporting agency, and that may actually drive the market even more than what today's report does, because those numbers will be a little bit fresher. They're out of South America, and if CONAB comes in something in the 125, 126 range for Brazil's soybean production, that would push us, I think, quite a bit higher and be very positive for prices.
It's interesting that this morning we had another export sale announced by USDA. It was soybeans. We can take a look at what the numbers were this time around. It was actually a sale to China specifically, 240,000 tons this time around, Brian. So this is starting to be quite a string that we're putting together of daily overnight export sales, and a lot of them going to China, and they're all soybeans. And again, I will note on this one, it's for next year. It's not for this marketing year. It's for the next crop. And this is a trend that has been really apparent here lately. Why are they doing that?
Yeah, it's something I think the trade is going to take kind of a lackluster approach to that, China maybe is booking out farther because of their concerns about rising prices, but they may actually have enough inventory booked between the U.S. and South America that they don't need to be really aggressive of buying this year's marketing year's crop. So I think it's something that the trade likes to see. Yeah, we're making sales and it's to China, but it'd be nice if it was this old crop marketing year, and that's not been the case. So we haven't seen any corn sales this week. That's I think going to be a little disappointment. The weekly EIA report comes out 9:30 this morning. It could show us once again decrease in productions, increase in ethanol stocks, because our ethanol margins have turned negative, and that's a demand negative signal for the corn market. So that could be a little disappointing to the trade as well.
But if you look a little deeper in the weeds, aren't we still shipping corn that China purchased like a year ago, and we're still trying to get caught up on the shipments? We haven't even shipped it all yet. Is that correct? Is that what could happen with soybeans a year out from now?
It could be that's what's going on. Is there's enough shipments that are still being trying to be sent over to China. They don't need to be buying a lot more because the boats are already full, so to speak. So that's certainly a possibility of what's happening, and that they're trying to get some coverage for this next marketing year and get things in place because of the delayed shipments.
So March corn overnight 3.5 cents higher on the Globex at 6.35 3/4. However, new crop December corn down 3/4 cent at 5.81 1/4. So that was a spread adjustment there of a little over 4 cents between those 2 months. Meanwhile, with our quotes provided by Bar Chart on soybeans, March was 7 higher at 15.76 overnight. Looking at the new crop November contract and how it finished up, we had the last trade this morning quoted at 14.20, and that was 7 cents higher. Now, looking at our wheat complex here, it looks like a little weakness in Chicago. March down 4 cents at 7.74 3/4. As we ended up the Globex session in Kansas City wheat, we had March down 3 at 7.98 1/4. So it's back under $8. And Minneapolis wheat down 3 1/4 at 9.37 1/4. We'll come back and talk livestock with Brian Hoops right after these messages. Come on back. Let's go back to Brian Hoops. He's with Market Solutions, Midwest Market Solutions, rather, in Springfield, Missouri. And Brian, looking at the livestock trade here, the cattle market, we had some cash cattle trade on the livestock summary yesterday, but seems that it's pretty quiet yet, a little bit early in the week. Don't know if there's any trends that you can really read from this. It seems like overall this cash cattle market has been holding kind of steady, I guess, compared to last week, maybe a little bit weaker. The futures trade here on the live cattle, if you look at where we have been here recently, it looks like maybe that last day in January, I believe, we may have made a temporary high. So what do you think about this status of the live cattle market right now? Does it seem prone for a break, or what do you think?
Yeah, I don't know that we're going to have a hard break in this cattle market with the stock market being stronger and the slaughter pace really picking up. We're stronger than last week's pace by a couple thousand head already. Compared to a year ago, we're much above that. So our demand for the cattle from the packers is there. It's just the fact that, a cash trade has not really responded this week. So far, we're kind of trading in that steady mode, and we may see some steady trade later this week and maybe even higher, I think. But the futures have dialed all this in already, and unless we see a jump of another $3 or more, futures unlikely really to react to this cash trade. So I don't, as I said, don't see a hard break coming in this cattle market right now. But to really advance much, it's going to take a big jump in the cash, and I don't know if that's in the cards either.
All right, so April live cattle were at 146.17 yesterday. That was down 22 cents on the day. Looking at our feeder cattle market yesterday, this is how we finished up. That'll be our starting point for today. We had the April contract actually up $1.50 at 171.77. And on lean hogs yesterday, here you had more new contract highs, and you had the April contract, look at that, 252 higher at 103.80 at the end of the day, and that was about 80 cents off of its earlier high from earlier in the session. So quite a performance on the lean hogs. Well, Brian, thanks for the time this morning. I appreciate it very much. You take care today. Brian Hoops of Midwest Market Solutions with us to kick things off. Janet, we'll get underway at the bottom of the hour.